tax equalization for retired American expats living in France. For example, if taxes are paid in the US on interest and capital gains, does it mean no taxes are paid in France? Or are there nuances and thresholds we need to be aware of? Am I correct in assuming France will not tax Social Security and withdrawals from my IRA, Roth IRA? A lot of questions there. Everett, you want to take a bite?
Just to say that the principle of the tax convention between France and the US is that a single revenue is taxed in one country or another, but is not double taxed. After that, the tool used to avoid this double taxation is to say that the revenue that is to be taxed in the US is to be declared in France, but there will be a tax credit that will annihilate the French taxation. However, I don't know exactly how this tax credit is calculated, and I would say it would annihilate the French income tax. I wouldn't be sure it annihilates, for example, CSG, which is a tax that is used to pay social contributions or the health services. So there is a tax credit. You must declare, and there is a tax credit.
Okay. So I guess that he speaks about that there's retirement income, there's interest income, and there's capital gains, right? So the retirement income we discussed at length previously. So that'll be taxable in the US only, not in France, all things being equal. In terms of the interest and capital gains, we're saying, well, it's US source, so the US is going to tax it. But when France looks at it, they'll give a credit for what has already been paid in the US. And the difference, if any, would be payable to France. Am I correct?
No, I think you're correct. Yeah.
I think so. Honestly, in those cases, I go back to the tax convention. I read it, and there are so many cases that I prefer to read again the tax convention before answering.
Yeah, absolutely. So whoever asks this question, please reach out to Everett directly.
With some countries, for example, there is a taxation at source. And so there is, for example, 5 to 15% that is taxed in France or something like that. So there are honestly in the world quite a lot of different cases.
Mm-hmm. Cedric, any comments or thoughts?
Yeah, I think, you're right. Yeah, there's no double taxation. If it's a pension, a retirement account, then it's great. You don't have to worry about it. The ROTH is tax-free in both countries. So then that's a great thing. And then, I think everybody's right. And then each case is different depending on the income. But yeah, I would say most, U.S. investments are going to be taxed in the U.S. only. And then there will be a tax credit in France, yeah.
And you may think I am a bit too careful, but I have seen cases of people who have gone around the world. And so, for example, they have some money in the US, but also in Germany and also in France. So we have to study all the case of the client, and maybe it does not depend on only one tax convention, but maybe on several, depending where he has revenues and properties.
Mm-hmm. Correct, because I've spoken to clients who have, in this case, they would have left France to go work in the US or work somewhere else. And they took a position which is a literal interpretation of the tax treaty, but then the French tax office issues them a notice saying that it's what's the translation? An abuse of the convention, and they deny it. So I agree with you that generally speaking, people need to be very, very careful and not assume because they saw it in a Facebook group or they heard it from a friend that it is a legitimate position to take. You need to look very carefully.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.